In this video, we're going to go into free indicators that are very powerful, how to set them up, how to use them, and then we're going to give you some strategies of combining them together so you can start to develop your own trading strategy that has an edge for you. Now, if you are a beginner, this is going to help get you jump started. But if you are an intermediate or more advanced, we are going to get into those topics while starting with the basics. So stick around and let's dive into the charts. Okay, so the first indicator I would use if you're brand new or if you're just not using this already is going to be VWAP. What this is for me, I'm going to teach you what it means to me, not the definition, right? There's tons of videos teaching you exactly what the VWAP does. But for me, the way I use the VWAP is price above it or below it. And that just helps me form an initial bias. Above it, we're going long. Below it, we're going short. So above it, long. Below it, short. All right. And then we also know when price is moving back and forth across the line, it's not a high probability trade and you could probably get chopped up. As you can see here, wicks and runs and back and forth. Not a good area, but once we were below it, good little run, right? Back into the chop zone. Once we went back below it, had a good run after one last little chop, and then finally made its decision to run away. So VWAP, use it, get your bias, and it helps you just kind of quickly visualize where you're at in the market. So if we're taking shorts here and price starts to turn around, well, it's probably coming back around this line. Either it's going to chop back and forth like it just did, or it'll pull back into it. Something like this. It'll pull back towards it, run away, pull back towards it, start to run away. We're in this consolidation zone, but once it did run away, nice run, then pull back, run down, pull back, run down, went above, pull down. So just a gauge in the market where price could run. If it is retracing, where can it retrace to? Next thing I would add and start using is the 21 EMA. Now what this is going to help you do is really start to identify where the bias should be going. So an example, we'll go back a different day since we already did that day. So 6:30 open down here. Okay, so market opens, price under VWAP, 21 EMA is below the VWAP, so bearish, okay. But we want to get through the 21 EMA before we go short again. So just because we're below, we're not shorting. And then once we broke below, we're finally going to take a short. So here, if we got in right as this candle closed, again, I usually trade on the 2 minute, but 5 minutes are easier to visualize. So my stop would be somewhere down here. Had a little run, would have got some partials, probably stopped out when it wicked up here, depending on when it went. But then here, like, we know not to take longs yet. Kept us away from trying to go long. Could have made a little bit of money on that short. And then finally we're above it. It's pulling back to the VWAP and the 21 EMA is finally above it. So here is a good entry. Then you could take it on up. So EMA, use it with the VWAP and it'll start helping you narrow down your bias and wait for when price is finally all in agreement to get your entries. Now, another thing I like to do, and this is going to give you that bigger time frame trend, so that way you aren't chopped up in the noise here. So this is a free indicator from us. If you click the link down below and scroll towards the bottom, our indicators are listed there. So this one is pretty cool because it's a 9 and 21 EMA, but from the 2-hour chart, and we're on the 5 minute. So now we can see the 2-hour trend has been down this whole time, right? So we should not be buying longs unless we know it's going to be a super quick scalp, because we're not expecting price to run really. Obviously, you can make money here, but you need to know it's reaching for this line and we're not going to cross through this. So if you can make your money before we get to this line, valid setup, right? All this lines up, buy, valid buy. We start getting towards this, we better lock in our profit. And you can see price is for the most part going down. So I like this because it helps you without flipping to the 2-hour chart, or you could set it to any time frame you want. I like the 2-hour chart. It kind of gives me that general trend that I would like if I drew lines and stuff, right? And it just, now I got the bigger picture right here. So now if we zoom back in, once we broke below here, we can start looking for shorts. And that's when price finally started to run. We're doing a retracement. Now this is not a good setup because the VWAP's not below it, but within this range, right? There's money to be traded and made. But I would have waited till we broke through this again. We respected not only the EMA from the 2-hour, we respected the VWAP, and we finally got back below the 21 EMA. Boom, get in, take it down to these lows or whatever your system is. That's just kind of roughly what I do. I look for lows and I go not at the wicks, but where the bodies are, just to make sure I'm not too greedy. And if price never flips, likely we might get a wick here and then it runs back. So, all right, now we're going to go into volume analysis before I show you the final indicator. So the charts are getting a little messy, and I suggest you kind of know where you are, and then you could turn them off and only use maybe one main one that you just want to keep your eye on, right? And it's usually like the 21 EMA for me, or the VWAP is the one I leave on, but usually it's the faster one I leave on just to kind of eyeball, right? So let's go to the volume analysis. So this one is really cool to use, and there's more to dissect from this, and I'm not going to teach you everything. I'm just going to teach you what I use it for and just how to implement it into the indicators we already have. So what we're looking for down here is red candles, and if we get 2 red volumes, even if it's just one, we want to identify what that looks like in the candles, right? So this range, there was a lot of volume, so we kind of want to get out of this range. Then if we drew these next ones, okay, so now we have this to this, and this one is inside it. So now we have this. So now we really want to get out of this range and start getting towards the low end. And usually what this means is 2 things. One, if it's a red candle and it's a big candle, right? So now you get your volume candle and the actual candle is big. Cool. A lot of the momentum, orders, everything, the volume went this way. But if you get a red candle and price is kind of not moving, both sides are kind of playing, and that helps us identify these accumulation and distribution zones, and that's where price is likely to chop around. And then we had more form in, and so basically these 3 all together was in this range. And then once we finally got out of both of them, finally had a nice little run. And we'll go back in time, give you another example. So these 3 red candles right here, not too worried about this one. It's pre-market, but these 3, as well as, so drawing this, you can see where price is accumulating orders, right? But you could also tap into support and resistance and start finding those type of areas. So say you took a trade on this, you would want to aim for this. Now you would have got stopped out, break even, whatever. Try it again. Boom, enter. We're up here. Partials or your full trade. That's enough points for me to make my money off one contract. Or hold. Now we're up, chopping around. We turned this resistance and support, previous support, back into support kind of. And then finally rocket it off, and we're well above these red candles down here. So those are all the free indicators. Definitely add them, implement them into your system, see if it helps you avoid some bad trades or if it helps you identify some good trades quicker. That's always what you should be testing, obviously, of your main system, but try to find some solutions that not only help you have the same wins, but maybe avoid some of your losses, and ultimately that'll increase your profits, right? So always be a student to the markets, always be learning. But if you want to use our premium indicator as well as get into our course, so any premium lessons we give out or updates to these indicators, lifetime access, one price right now. And what that's going to be is, we'll leave the support and resistance on. So we're going to turn it on, and it's going to be a little busy. I turn a lot of it off, but the features are here if you want to use them. So we identify hot zones in the market. Anything after this gray to the orange or gray to end of day is where you want to be trading. Now I'm going to turn those off. Or I'll teach you how I set it up. So no labels. I leave those lines on. Now I need to go back in time. Okay. So now we have our morning open range, and if you look, kind of lines up where our red candle box was that we drew. So we have our high and low. We want to get above this for buys, below this for lows. We have our midnight open price from New York, midnight. And that just helps us visualize where the new day of the market kind of resets in New York, since the markets are in New York. So we're below this price and it's in our bias direction, we're going shorter. If it's above it and our bias is down, well, now you're getting a discount on your bias, right? So easy way of looking at what that midnight price is for you. VWAP is attached into the indicator. And then you also get our super trends, the cloud, which is EMA crossovers with some logic to help you visualize the market. And it is referencing a higher time frame super trend. I am on the 5 minute, so if I go down to the 2 minute, you'll see the difference better. So reference is the higher time frame at help identify what is a downtrend and what is an uptrend, as well as with the VWAP. So you could realistically turn off higher time frame super trend. We could turn off the VWAP, and then just leave the rest. That'll be fine. Now your charts are a little more clean, and it'll start to help you when to take trades. So if you want to learn more about that indicator and the full strategy and logic behind it to help identify when to take trades, when not to take trades, link down below, get lifetime access for one-time fee. Otherwise, go check out all these free indicators, and maybe if you used them in the past, kind of re-evaluate them with how you're trading now, and kind of think about what we talked about in this video. See if you could start to implement those little techniques and tips with these indicators, and see if it helps you improve your win rate or just overall knowing when to protect your money, right? That helps you make more money in the long run if you can protect your money, right? You don't have to worry about winning more than, like you have your losses and you're trying to win more than your losses. But if you just minimize your losses with a sound system and indicators that help you identify these key areas where it is not likely to be a good trade. Well, maybe we just go in to protect our money now instead of worrying about the good trade. Hopefully this has helped you out. I'm going to keep making more videos talking about basic stuff with trading, but bring them into an advanced spotlight and help you think bigger with the basics and really start to build out a system that works for you. So if you haven't already, click that subscribe button, thumbs up, and if you got any questions, comment down below. For now, that is it. I'll see you in the next video. Peace.
Like and subscribe.